Breakouts presents great trading opportunities, and to take advantage of these trading opportunities, you must know how to enter, when to enter, and how to manage your risk while trading breakout. So in this video, I am going to tell you some very excellent methods to trade the breakouts, specifically to take entry while trading the breakouts. So stay tuned and watch this video till end. So I frequently post breakout stocks on Twitter. So whenever breakout happens or whenever breakout happenings is happening, I post those chart on Twitter, and I trade those. But then many times I get queries from my followers that, okay, you have posted this chart, it's breakout happening, but how to take trade in this breakout? And today I am going to answer that how to enter. There are different methods of entry. These are based on your psychology, your risk appetite, your attitude. So one method don't fit all. So you have to identify which method best suits your personality. So let's directly start. First, I will take you to the to my Twitter page, and see this one. This I have posted. This is a chart of Birlasoft, and say I posted it on 25th of May when breakout was happening here. And from this point, it from 300 or till 400, it went 100 points, around 33% up than this level. But when I posted this, it was very important to trade it correctly. Okay, because see, you cannot put your stop loss below this right here. So it is very huge stop loss, or you cannot put stop loss here, right? So you should know where should be your stop loss, and for that you should know how to trade it, because such big huge stop loss is not good. You are taking huge risk. Now I'll take you to the charts and show you how to trade this kind of breakouts, or for that matter, see this chart. This is Hinduja Global. This also I posted it on 24th of May, and within 20 days it gave huge profits. So how to trade this chart? See, breakout was happening, but how to enter? What should be your maximum risk? And I am going to tell you all these things. So let's directly go to charts and see. Okay, this is chart of Birlasoft, which I showed you. This is daily time frame chart, and I'll just zoom it here. So this is daily time frame chart, and as you can see, breakout happened here and stock moved up. Now see, it was already in momentum, it was already going up, and then it did this 4.5-5 months consolidation. So when such consolidations happen, and when stock moves out of such consolidations, it is called breakout. And when breakout happens, stocks moves aggressively, so their movement will be fast. Now how to take advantage of this? First method and simplest of the method is see, you will be observing this structure, and when stock breaks this level and moves up, break this level. See, this level, this resistance level is created by these touches, right? Stock touched all these places, and that made this level very strong. You can watch our previous videos in this course, in this basic course, where you will come to know about key levels and resistance levels and support levels and everything. So there you will get all the basic knowledge and understanding of this. Here I won't explain those in detail here. So this is a key level, and as this level breaks, you have to immediately enter first method. But where should be your stop loss? Your stop loss should be below the breakout candle. You are not supposed to put your stop loss here or here. That can't give you favorable risk reward. So your stop loss should be immediately below the breakout candle. That is first method, and that is a very naive method. That is for those who are not very well versed with technical analysis, or they don't they have no patience, or they have fear of missing out, because many strong breakouts, when they happen, in most of the cases retracement don't happen, and people don't have time. When breakout happens, they have their work, so whenever they see breakout, they want to enter. For those people it's good, or some working people, some people who are doing business, so who cannot watch the charts and who cannot patiently wait for their favorable entry condition. For those, this is the simplest method, that whenever breakout happens, just enter on the first candle, and below that candle should be your stop loss. Now the second important method is, see, whenever breakout happens, let me clear this, and okay, so whenever breakout happens, so suppose this is your key level, and the stock is in consolidation. Whenever breakout happens, in most of the cases it may retrace and come to this level again. Okay, so in the same time frame, so this is daily chart. If it retraces, you can enter at this point also, but you have to see reversal candle, you have to see a bullish candle from this level, and you have to enter, and again stop loss below that candle. This is called pullback trading. But in most breakouts, which are strong breakouts, pullback don't happen. Pullback till key level don't happen. Means price goes up, but pullback till this level generally don't happen. But yeah, I have a chart recently where pullback happened, so I will directly show you that chart. Okay, see, this is chart of ONGC, and this was a breakout. So price went up, so price has broken this level and went up here, and then again came and touched this point. So this is called pullback. So you can enter on pullback also. In that case, you have, again, when pullback happens, your stop loss should be below the breakout candle. See, this was your breakout candle, this green candle, and stop loss below this. Okay, this is for pullback trading, because there are many people who cannot trade breakouts directly, because their attitudes, their personality don't allow them. Okay, because they think that now price has moved too much, because these breakout candles are generally candles of 5%, 6%, 7%. So from the level, many times when you see breakout, price already moved by 3%, 4%, and then some people are not very comfortable to directly enter. so they should wait for pullback and then enter. But believe me, in most strong breakouts, pullback does not happen. Okay, so then how should you trade? If breakout happens, how should you trade? In that case, if you go to lower time frame, you will see some structure like this. When breakout happens, when stock goes up from the breakout key level, in lower time, this is daily time frame, so lower time frame is you should use hourly time frame. In this case, don't go too low, 5-minute kind of time frame. You should try to enter in hourly time frame. So how to enter? Whenever breakout happens, so if first hour candle moved up, then you will see then consecutive candles create pattern something like this. And what you should do is, this is kind of wedge. When you see this wedge has been broken or price moved out from this wedge, you should enter. Now we'll go to lower time frame in this chart and we'll see what kind of structure formed there. So this is daily time frame, and now I am going to hourly time frame. Very good. So yeah, so see, in hourly time frame what happened? This was the breakout and this was first 1 hour candle, and then what you can see is small hourly candles. In this case, what you should do is you should just draw the wedge line. So this is something called wedge. So this wedge is created by this chart. When price breaks out from this wedge, you should enter, you should buy here. And where should be your stop loss? Previous low, which is here, this one. So this should be your stop loss. Okay, now if you want to trade small pullbacks, see this is one method where in lower time frame you are taking first wedge and entering. Now if you want a bigger confirmation, then you should wait. Now this whatever I explained you, this happened very frequently, but the next pattern which I am explaining you don't happen too frequently, and that pattern is this one. When price moves up, it come down. Now this is again a falling channel. Okay, price moves up, this is kind of correction, but many time it don't come for full pullback. Okay, then what you should do is you should draw a trend line like this. Okay, and when this trend line breaks at this point, when this trend line breaks, you should enter. What should be your stop loss? Low of this candle. Fine. Now these give excellent risk reward because your risk is less and you get huge rewards. Sometimes it is 1 to 5, many times it is 1 to 10 also, even more also. Means if you are taking 1 rupee risk, your reward is 10 rupees. Okay, now see, in some cases your stop losses also can hit, but those are very small losses. Okay, so this is one method of trading the breakout. Now next one is, many traders, they want full confirmation. Okay, this pattern, so see, this is called breakout. So price moved from this. Okay, this is something called retest, but many times it don't come here. And this leg, third leg, is called continuation. Okay, if it pull back here, or it moves from midway, you can enter when this level is crossed. Okay, but again you have to enter it in hourly time frame, and when this level crossed, put your stop loss in previous swing low. Okay, all these swings and everything, for all these watch our previous videos on technical analysis. Now this is called breakout, pullback and continuation. So this also you can use for trading. So I explained you few methods: immediate entry, next entry on pullback, next entry on continuation. Also I explained you few entries where you draw the wedges, like the small wedge and then enter, or the big wedge then enter. And stop loss always should be your previous swing low. And when you are trading the daily time frame chart or daily time frame breakouts, then you should enter on hourly time frame. Now we'll see some other chart. The HGS. See, this was also a very good breakout, and it gave excellent returns. See, now this is hourly chart. First let me show it in daily chart. So if you see, there was uptrend and I noticed this pattern, and here the breakout happened. Okay, now how to trade this? First, either you can enter immediately and your stop loss will be below the breakout candle, or you have to immediately move to lower time frame, that is hourly time frame. See, you got many opportunities here. Now see, if you immediately enter after breakout, you will enter here. So daily candle low, this was the daily candle, and your stop loss was here. In the direct entry, you will enter somewhere here and your stop loss was this on daily time frame. Now if you want to enter on hourly time frame, you can just draw this this line for the wedge. See, and on breakout of this, because see, there are three touches here, right? This is 1, this is 1, this is 2, and this is 3, and then price moved, right? So once price break this level, you can buy. This is your stop loss, previous swing low in lower time frame, that is hourly time frame. Or when pullback happens, continuation happens, this is your entry, but then your stop loss, previous swing low, here or here, anything is fine. Next, you can use the method of this third method, that is you draw the trend line like this, and this trend line has been crossed here, broken here by this red candle, and this will be your entry. When the trend line is broken, this entry. Where is your stop loss? Below this. Okay, and this is how you have to trade breakouts. This is how you have to enter, and this will be very high risk reward trades. So if you have any questions, then comment on this video and I will be more than happy to answer you. Also watch our free videos in this technical analysis basic course, and these are from very basic. You will understand many things and how to trade, how to become successful trader. So also there are very good lessons on trading psychology. I provided all the links in the description of this video, so please go through it. Also, don't forget to like this video, and most importantly, subscribe to our channel. So that's all for today. Thank you very much, and goodbye.